Welcome to Chartered Accountant's Pen. In this lecture, we will explore the foundations, structures, and market practices of Sukuk, with a special focus on Pakistan's growing Islamic finance industry. Based on principles of justice, equity, and risk sharing, prohibits riba, interest, gharar, uncertainty, and maisir, gambling, encourages ethical and asset-backed financing. Islamic capital markets connect savers and investors through Shariah-compliant instruments. Sukuk, Islamic equities, and mutual funds provide alternatives to conventional finance, supporting economic growth. Sukuk are not debt instruments like bonds. Instead, they represent ownership in an underlying asset that generates lawful returns through lease, sale, or partnership arrangements. Sukuk evolved from classical Islamic contracts to modern capital market tools. Malaysia pioneered the regulatory framework, followed by strong participation from the GCC and Pakistan. Unlike conventional bonds, Sukuk returns depend on the performance of the underlying asset. This ensures compliance with Islamic principles of fairness and real economic activity. In practice, most Sukuk in Pakistan are asset-based, providing investors with rights to returns from assets rather than direct ownership, an important distinction for Shariah compliance. Ijarah Sukuk are the most popular in Pakistan. The government issues them using public assets, such as highways or buildings, generating Shariah-compliant returns through rent. Mudarabah and Musharakah Sukuk allow investors to become partners rather than creditors. Profits are shared based on pre-agreed ratios, reflecting true risk-sharing in Islamic finance. These Sukuk types facilitate trade and industrial projects. For instance, Pakistan's energy and manufacturing sectors have used Istisna Sukuk for financing power plants and construction projects. Every Sukuk transaction involves multiple parties. The SPV issues certificates, holds assets, and distributes returns to investors, all under regulatory oversight from SECP and the State Bank. In Pakistan, Sukuk issuance follows SECP regulations and Shariah guidelines issued by the State Bank. Rating agencies assess the risk profile to enhance transparency and investor confidence. The Shariah board plays a critical role by ensuring the Sukuk's design, assets, and returns fully comply with Islamic principles from issuance to maturity. Proper documentation and disclosure safeguard investor rights and Shariah compliance. These are mandatory before any Sukuk is offered to the public in Pakistan. Sukuk differ fundamentally from bonds. While bonds promise fixed interest, Sukuk distribute profits generated from real assets, aligning financial activity with tangible economic value. To encourage growth, Pakistan's government provides equal tax treatment for Sukuk and bonds, ensuring fair competition in the capital markets. Issuing Sukuk involves identifying assets, forming an SPV, obtaining regulatory approvals, and listing for investors, a process carefully managed to ensure compliance and investor trust. The regulatory ecosystem in Pakistan, led by SECP and SBP, promotes transparency and investor protection while enabling innovation in Sukuk issuance. Once issued, Sukuk must be regularly monitored for Shariah and financial compliance. Investors receive periodic rental or profit payments throughout the tenure. Globally, Malaysia leads Sukuk issuance, followed by Gulf countries. A growing trend is the introduction of green and socially responsible Sukuk, aligning finance with sustainability goals. Pakistan's Sukuk market has expanded rapidly, driven by the government of Pakistan's Ijarah Sukuk and private issuances by major corporations and Islamic banks. The government of Pakistan Ijarah Sukuk, backed by motorway assets, is a benchmark product for domestic Islamic finance, offering stable returns and regulatory trust. Sukuk are vital instruments for financing infrastructure, managing liquidity, and developing capital markets. They serve both government and private sector financing needs. Challenges include varying Shariah interpretations and limited standardization. However, innovations like green Sukuk are reshaping the market towards sustainable development goals. Thanks for watching Chartered Accountant's Pen. Please subscribe, share and hit the bell icon for more informative videos.